Welcome back to another video where I'm going to be discussing the swing highs, the swing lows, and what the candlesticks are actually telling us, where we are in the market, and how we can avoid losses. Now, without further ado, I'm not going to complicate it. We're just going to get going, and then we're going to move on to the charts. So stay tuned because this minor tweak can change your whole entire win rate. Focus on what we have in front of us. I've kind of designed the drawing where we have the swing low and the swing high. This is something that you're going to see in the markets a lot. So the push starts from the low, goes up to the high, and then has another retracement. Now these candlesticks consist of two things, bodies and wicks. The wicks are the trail of where that candlestick was before the closure happened. The candlestick opens over here, closes over here, but during the time the candlestick was closing, it decided to do this and then closed like so. At the closure of this candlestick, you have an open of another candlestick. Depending on what time frame you are, these candles change. What I mean by this is, if you are on the 15-minute chart, for example, that means each candlestick is for 15 minutes and then another candlestick opens. If you are at the 30 minutes, for example, well then each candlestick is 30 minutes. So if this was on the 30-minute time frame, for example, if this was on the 30-minute time frame, well then that means each candlestick is two 15-minute time frame candlesticks. The reason I say this is because on the 15-minute time frame, it takes 15 minutes for the candlestick to close, but on the 30 minutes, it takes 30 minutes for that candlestick to close. Other than this, you have the wicks. The wicks are, like I said, the trail of where the candlesticks were. So the candle could start to open over here, go up to here, and then close like that. Now, just to make it easier for you, I've marked them in green for the bullish candlesticks and in red for the bearish candlesticks. Moving on, we have a push from the swing low to the swing high. Now the swing low is the lowest point of the push and the swing high is the highest point of the push. Between these, we have internal structure happening. What does that mean? It means everything that's happening in between is not a new swing before you see a body closure of the candlestick over the swing high. That means there is buyer control. If you see body closure of the candlestick under the swing low, that means there is seller control. Now the swing high changes between the wicks as well. So let's say, for example, this goes up to create a new high like this. This becomes a new swing high, but this does not say that now buyers are in control, because this is what you need to focus on, and this will save you a lot of money on the charts. Let's say this candlestick over here has the swing high and it has wicked into it over here, but you did not realize that the candlestick hasn't closed yet. And what you're doing is the candlestick, let's say, still has another minute or two, and you decide to buy because you're seeing that the body is closing like that. But then as soon as you buy at the high, the candlestick goes on and closes beneath. Now this has become a new swing high, yes, but this has not been a sign for you to buy. So what happens is that now you have a position set over here, but you have clear rejection, which shows that price is now ready to go to the downside. Before we go to the charts, I just want to give you kind of an example or a quiz where you can pause the video and then you can ask yourself. This is the initial graph that we were speaking about. This is the same candlestick that we were talking about. Now this became the new swing high, but now I've kind of continued with like a follow through. So I would want for you to pause the video after I do the countdown from 3, 2, 1, and I want you to decide where is the new swing high and where is the new swing low. So 3, 2, 1, pause. Okay, now this is the new swing high and this is the new swing low. But let's focus on why this was the case. As soon as this had the wick cover above, we have now changed the swing high, but there was nothing happening in between. But you can see that this over here has also wicked under, so now we have this swing low. And if you remember what we spoke about, if that was the case and you were to start selling over here and the candle were to do something like this, yes, you would have a new swing low, but if you were to sell, you would quickly be in the negative as well because price is now performing an upside potential move. So after this swing low happened, another tap into it, but no body closure. So now we are left with this swing low. So everything that's happening in between, we are now waiting to see where we have a potential entry. Now, if something like this happens, for example, and the body closure is now above, you can expect to start buying after you see a clear retracement, let's say to here, and then you can start buying from this zone over here to then have the push to the upside. So now we are ready to move to the charts. I'm just gonna mark the swing high and swing low with the highlights, and then we'll mark them the way we've done before. So just take a minute or a second and see where the swing highs and lows are. This is the swing high and this is the swing low. So the highest point to the lowest point of that push. Everything between is what? Internal price action. So now let's mark them the way we marked them on the graph last time. This would be the swing low, and then this would be the swing high. What do we want to see? We want to see at these extremities, how is price acting with them? Let's just extend them and see what taps in before the other. We see that we have a tap in at the high. So since we do not have a body closure, here's what we're gonna do. I'm gonna play it and then you're gonna see. Now you can see that since we did not have a body closure of the candle above this wick over here, which is marked by this line over here, then you know this is a rejection. So if you were to buy at the high, you'd have already been in the negative quickly after. So you see all this negative push caused by the reaction happening at the extremity over here. I'm going to continue playing so you see how the graph is going to end up playing out. And then you notice that this rejection over here caused all of this push to the downside. Now you can see that as soon as we have a rejection with a body closure under, let's say this over here happened and you did not sell, but then you waited for the retest like we explained before, back up to this point, the previous structure point that caused the rejection as well, also wicked away back up to the point over here, so probably had a full retracement and then continued under. But then when you see the body closure after the wick, you can see that price is now continuing to the downside. This is what you want to see and know from price. So again, just a quick recap. Let's say we have something like this happening and swing high marked over here, the swing low marked over here. Now what we want to do is we want to wait for a retracement happening or a body closure over or under these extremities in order to take a push to the downside or the upside. So again, let's say this would be the swing low and this would be the swing high. If price did not show us a rejection, then we are okay. We're good to go. We can take a sell trade. So let's say price did a retracement over here, then had a body closure and had another retracement, and now you know you're ready to trade the lower low. But if price were to not close over this, like this over here, and then this was something like that as well, then now you know rejection is occurring and we are probably going back up to the swing high. This tweak is going to actually make you avoid so much more losses than anticipated, and because of this, you now understand why you should wait for the swing high and swing low and trade within the range. If you like this video, just comment below any other topic that you like so I can cover that, so we can tweak your entries and fine-tune your strategy. Again, thank you so much for watching. I will see you on the next one.